Last month, I logged into my credit card account to pay my bill. Before I could do anything, a pop-up appeared. It said, "Update your annual income to help us serve you better." There was a little form with my old income pre-filled and a friendly box inviting me to type in my current number. Serve me better, that's what they said. I closed it without updating anything, because I know exactly why they're asking, and it has absolutely nothing to do with serving me better. Stay with me through this entire video, because by the end, you're going to look at every financial form you've ever filled out completely differently. And the thing I'm saving for the very end, the part most people never hear, is the one piece of information banks are counting on you never figuring out. Here is what most people don't realize. When you tell a bank your income, you're handing them ammunition. You're giving them data they will use to make decisions about your financial life. Decisions that benefit them, not you. Every time you update that income field, algorithms start running. Calculations begin. Your profile gets adjusted in ways you will never see, but will absolutely feel. Banks have convinced us that sharing income information is routine, expected, maybe even required. They slip income questions into applications like they're asking for your phone number. They send friendly update requests disguised as customer service. They make the whole process feel so normal that most people never stop to ask one basic question. Why do they actually want this number? Here is something that will probably irritate you. Banks are not required to ask for your income in most situations. There is no law mandating that credit card companies know your salary. There is no regulation requiring your bank to have updated income information on file. They ask because they want to know. They ask because knowing helps them make more money from you. This distinction matters more than most people realize. When something is legally required, you have to provide it. When something is requested, you have choices. Banks deliberately blur this line because informed customers make decisions that hurt bank profits. Let me break down exactly what happens the moment you submit that income number. The first thing it affects is your credit limit. Higher income generally means higher limits. That sounds like a benefit, until you understand what higher limits actually do. Banks know that people with higher limits tend to carry higher balances. A $30,000 credit limit doesn't just mean you can spend more. It means you probably will. The bank isn't giving you more credit as a reward. They're giving you more rope because customers with more rope tend to hang themselves with interest payments. The second thing it affects is your interest rate. And this is where it gets genuinely uncomfortable. You might assume higher income leads to lower rates because higher earners are lower risk. Though reality is more complicated. Banks use income data to determine not just your risk level, but your price sensitivity. Someone earning $200,000 might be less likely to shop around for a better rate. The algorithm knows this. It adjusts accordingly. This practice has an actual name inside banking circles. It's called ability to pay pricing. The more you can afford, the more they charge. Not because you're higher risk, but because they believe they can get away with it. The third thing it affects is everything you see when you log in. Every offer, every promotion, every pop-up is calibrated to your income bracket. High earners get aggressive pitches for premium cards with high annual fees, personal loans, and investment products they don't need. Your income data isn't sitting in a database doing nothing. It's actively working to separate you from your money. Now here is the part I promised you, and this surprised me more than anything else I researched. Banks want your income data badly enough to ask for it repeatedly, but not badly enough to verify it. Credit card companies generally cannot access your tax returns without permission. They cannot see your pay stubs. They are relying entirely on what you tell them when you apply. So they want it badly. They just don't want it badly enough to actually check. What does that tell you about how they're really using it? Let me tell you about a friend of mine. She's a contractor with variable income. Sometimes $8,000 a month, sometimes $15,000, depending on project load. When she first applied for her credit card, she reported conservatively, using her lower months as the baseline. 2 years later, a pop-up appeared asking her to update her income for a credit limit increase. Her earnings had grown substantially. She entered her current number honestly. Within 3 months, everything changed. Constant calls about personal loan products. Every offer shifted to high annual fee premium cards. Her mailbox filled with balance transfer promotions designed to encourage debt accumulation. She had been reclassified. A peaceful banking relationship became an aggressive sales campaign overnight. She never updated her income again after that. When the pop-ups appeared, she closed them. Within 6 months, her banking experience returned to normal. The algorithm had stopped receiving fresh data. Her profile gradually decayed back towards standard treatment. This is the critical insight. Bank algorithms are optimized for fresh information. Stale data is less valuable because it's less predictive. A 3-year-old income figure doesn't trigger the same responses as a recently updated one. Every time you provide fresh data, you reset the clock. You become a newly classified target. The algorithms wake up and start working on you again. So when do you actually have to disclose income? And when is it genuinely optional? Mortgage applications require full income verification. This is federally mandated. You will provide pay stubs, tax returns, and employment records. There is no getting around this, and you wouldn't want to. The absence of income verification on mortgages is what caused the 2008 financial crisis. Auto loans typically require income disclosure, though verification standards vary by lender. Credit card applications ask for income, but as we just covered, they don't verify it. You need to provide a number to get approved. Be accurate, but you're under no obligation to include every income source or report your highest possible figure. Periodic income update requests on existing accounts are entirely optional. There is no penalty for ignoring them. They will disappear and return every few months. You can close them indefinitely. Nothing will happen to your account. I want to be completely clear about something. I am not suggesting you lie. Providing false information on a credit application is fraud. It is illegal. It is genuinely wrong. Do not do it. What I am suggesting is that you stop volunteering information that will be used against you. There is a significant difference between lying and simply declining to update. Closing a pop-up is not deception. It is privacy, and it is entirely within your rights. Here is the broader principle that applies far beyond banking. Every institution that asks for your data is collecting it for their benefit, not yours. They may frame requests as serving you better, improving your experience, or ensuring accuracy. These framings obscure the actual purpose, which is enabling more precise extraction of value from your relationship with them. Provide what is required. Decline what is optional. Understand that every piece of information you share will be analyzed and used in ways you cannot see. Banks provide genuinely valuable services. Credit cards, loans, and deposit accounts enable economic participation that benefits everyone. But banks are also profit-maximizing entities that treat customer data as a resource to be used. Understanding this does not require cynicism. It requires clear-eyed awareness of how the relationship actually works. The next time that income update pop-up appears, you will know exactly what is happening. The bank wants fresh data for algorithms that will optimize their profit, not your experience. Close the pop-up. Keep your information to yourself. Let your payment history and responsible behavior speak for themselves. That is the data that actually matters. And unlike stated income, they cannot get it just by asking nicely. If this changed how you think about your relationship with financial institutions, even slightly, drop a comment and tell me where you are watching from. Tell me which part of this landed closest to your own experience. I read every single one, and hearing from people across the world shapes everything we cover next. If this is the kind of content you want more of, no promises, no shortcuts, just the mechanics that actually matter, subscribe and share this with someone who is still filling out every form that gets put in front of them without asking why. You have more choices than they want you to know. Start using them.